Uber, once known as a high-burn growth startup, has undergone a remarkable transformation over the past several years. From a company heavily reliant on investor funding to fuel global expansion, Uber is now emerging as a free cash flow powerhouse, reshaping its business model, leveraging network effects, and exploring new growth avenues. For years, Uber's story revolved around aggressive market capture, subsidized rides, and heavy investments in technology and infrastructure. The company prioritized top-line growth over profitability, often burning billions of dollars to gain market share across dozens of cities worldwide. Analysts and investors frequently debated whether Uber could ever turn these scale advantages into a sustainable, profitable business. The narrative is shifting. Uber's Q2 results demonstrate profitability at scale, with an operating profit of $1.5 billion and free cash flow exceeding $8.5 billion over the past 12 months. This newfound financial strength has enabled Uber to return capital to shareholders through buybacks, signaling confidence in its long-term strategy. Today, we'll break down Uber's next big leap into profitability, its global market dominance, advertising engine, network advantage, and stock upside potential, slide by slide. The most striking development is Uber's evolution from a growth burner into a cash-generating machine. While Uber's early years were defined by substantial operating losses, Q2 2025 marks a turning point. The company reported $1.5 billion in operating profit, demonstrating that it can scale operations efficiently across multiple geographies while maintaining profitability. Equally impressive is Uber's free cash flow, which has surpassed $8.5 billion over the past 12 months. Free cash flow represents the actual cash generated after capital expenditures and is a critical metric for investors because it reflects the company's ability to self-fund expansion, reduce debt, and return capital to shareholders. Uber has also announced a new $20 billion share buyback program, bringing the total authorization to $23 billion. Share buybacks not only signal management's confidence in the stock's intrinsic value, but also boost earnings per share and reduce shareholder dilution. These moves position Uber as a mature, cash flow-focused tech company rather than a perpetual startup chasing top-line growth at all costs. The combination of profitability, robust cash flow, and capital returns is a key catalyst for investor optimism. It signals that Uber's long-term strategy is working: dominate core markets, expand new revenue streams, and maintain disciplined cost control. Uber's dominance in the global ride-hailing market remains a cornerstone of its growth story. The market itself is projected to grow at a compound annual growth rate, CAGR, of approximately 14% through 2030, driven by urbanization, increasing smartphone penetration, and shifting consumer preferences toward on-demand mobility. Uber holds a leadership position in nearly all major markets, including the United States, Europe, Latin America, and select Asia-Pacific countries. Its extensive city coverage, driver network, and brand recognition make it difficult for competitors to dislodge. While regional competitors exist, such as Didi, Bolt, or Ola, Uber's scale, operational expertise, and technological infrastructure provide a significant moat. An emerging area of upside is autonomous vehicle, AV growth. Uber has invested in AV research for years and continues to explore partnerships that could eventually reduce driver costs and enhance service efficiency. Although full AV deployment is still several years away, the market anticipates that self-driving technology will dramatically improve margins and profitability, giving Uber a substantial long-term advantage over competitors still reliant on human drivers. This combination of market leadership, network effects, and future AV potential makes Uber a compelling story for investors looking for both stability and growth in the mobility sector. Uber is no longer just a ride-hailing company. It's becoming a platform for advertising revenue. In Q1 2025, Uber's advertising revenue exceeded $1.5 billion, representing roughly 3% of trailing 12-month revenue. While this is a small fraction today, projections indicate it could reach $2.5 billion within the next 24 months, driven by hyper-targeted ads leveraging Uber's vast user and trip data. The advertising model is capital light and high margin, contrasting sharply with ride-hailing operations that involve significant costs for driver incentives, insurance, and regulatory compliance. By monetizing its platform through advertising, Uber can diversify revenue streams without significant incremental cost, improving overall profitability. Advertisers benefit from hyper-targeted campaigns. Uber knows where users travel, when they are active, and can even segment based on ride frequency or spending habits. This data allows brands to reach high-intent audiences in real time, an advantage traditional digital platforms often struggle to match. Investors are increasingly viewing Uber's advertising segment as a potential game-changer, one that could materially enhance margins and provide a stable, recurring revenue source independent of ride volumes or driver costs. Uber's massive network of 180 million monthly active users and 36 million Uber One members represents a strategic asset that is difficult to replicate. These users interact daily with Uber's ecosystem, providing a wealth of behavioral and geographic data. Network effects create a virtuous cycle. More users attract more drivers, which improves service availability and reduces wait times, which in turn attracts even more users. This self-reinforcing growth model enhances Uber's competitive moat, making it challenging for competitors to gain traction in established markets. The network also enables Uber to monetize through advanced advertising and promotional initiatives. Using real-world behavioral data, Uber can deliver hyper-targeted campaigns that engage users at the right time and place. The result is higher engagement, conversion rates, and revenue per user, further boosting profitability without large capital expenditures. Analysts see Uber's network as a core differentiator, providing both operational leverage and revenue diversification. In essence, Uber's platform is becoming less about rides and more about a data-driven ecosystem capable of generating multiple streams of high-margin revenue. From a valuation standpoint, Uber's transformation is captured in its stock upside potential. Based on an EV/EBITDA model, the company has an enterprise value of roughly $323.75 billion, which, when net of debt, implies a per-share value of approximately $150. This represents a 50% upside from the current stock price near $100. Several factors support this optimistic valuation. Strong free cash flow generation, enabling aggressive buybacks and shareholder returns. Global market leadership with high barriers to entry. New revenue streams, particularly advertising and future autonomous vehicle deployment. Network effects that reinforce user loyalty and monetization potential. Investors should consider Uber as a cash flow-rich platform with multiple growth levers. While short-term volatility remains, particularly from regulatory changes, fuel costs, and competition, the long-term narrative is clear. Uber is evolving from a ride-hailing company into a multidimensional mobility and advertising ecosystem, unlocking substantial value for shareholders. In conclusion, Uber's transition from a growth burner to a cash machine, combined with its advertising expansion, network advantage, and future AV potential, creates a compelling case for stock appreciation. Analysts now see a realistic path from $100 to $150 per share, reflecting both intrinsic value and strategic optionality in the mobility and digital advertising sectors.